Hey everyone, welcome to this week's financial market review. We've seen significant economic developments around the globe, and today we're going to break down what it all means for you and the financial markets. First on the agenda, it's the United States, where the inflation story is getting more complicated. The latest data reveals that the year-over-year consumer price index, or the headline inflation, has risen from 3.2% to 3.7%, while the core CPI, which excludes volatile items like food and energy, dipped from 4.7% to 4.3%. On a month-on-month basis, both CPI and the core CPI tick upwards, echoing rising inflationary pressures. What does that mean? This information, coupled with unexpected boost in retail sales of 0.6%, produces price index increasing to 0.7%, up from 0.4%. The Fed has a very challenging juggling act to do here. It's walking a tightrope between the need to control inflation and the desire to support a recovering economy. These conflicting indicators make the Fed's next move highly unpredictable and will be a key focus for investors in the days ahead. Now, over to Europe, the ECB decided to raise interest rate by 25 basis points, but the market's not expecting any more hikes soon coming up from the ECB. The euro has basically fell to multi-month lows against the US dollar, signaling that investors are really cautious about the eurozone's economic trajectory. In the UK, economic indicators aren't looking rosy either. A larger than expected contraction of 0.5% in GDP for July and rising unemployment that has put a damper on the pound itself. Yet market expectations still indicate a 25 basis points hike from the Bank of England in the coming weeks. Now, let's turn to China. The PBOC is slashing reserve requirements for banks, aiming to invigorate the economy. Surprisingly, key economic indicators beat expectations, leading to a stronger yuan and affecting other currencies like the Australian dollar positively. Speaking of Australia, the unemployment rate ticked up to 3.7% in August. Despite this, the Reserve Bank of Australia held rates steady, indicating a complex economic landscape influenced in part by positive news from China, its largest trading partner. So in summary, central banks across the globe are basically grappling with economic volatility, inflationary pressures, and market expectations. Their decisions are causing currency fluctuations, commodity price changes, and could very well impact your investment portfolio. And next week, we have the FOMC as well as the Bank of Japan coming up with their decision as well. So that's it for this week's financial market review. Stay tuned for next week's coverage as we keep an eye out on key economic indicators. Tonight, on Friday, we still have the U.S. industrial production as well as the Michigan sentiment survey. Again, just a reminder, next week it's FOMC's decision time in terms of whether or not they're going to pause interest rate hike, or are they going to continue hiking this month, or are they going to put it on hold to November. Also, we need to take a look at what the Bank of Japan is going to comment, with what they have come up with contradicting comments regarding their monetary policy. With that, good luck with the trades. Have a great weekend, and I'll see you soon.